Good morning, everyone. My name is Michael Crabio, your host for Make Your Mark. I have the privilege and honor to run these webinars every Wednesday at 10 a.m. And I'm actually very excited for today because not only do I get to learn, but there are a lot of conversations that I have with real estate professionals, peers in our industry that come in to real estate wanting to invest in real estate. And there's a lot of questions in regards to what's the best way to do it and how to really take advantage of the resources and the money that we make to do it. And so I wanted to bring on Tim Johnson, who has the solution to the problem that many of us could be facing. And it's really just a great strategy and approach, and maybe a way that you can implement some things into your business. So, Tim Johnson, I'm going to go ahead and pass the mic over to you, my friend. Thank you for jumping on today. And it's all you, brother.
Of course, Michael, thanks for having me on. I'm super excited to be on the Make Your Mark, and I think that the information that we'll go over today, don't mistake me for kind of the classic tax professional. Okay, I love to give a good presentation. We'll try and keep this lively. Thanks for everybody who jumped on. I think most tax topics are easy to kind of skip by. So if you're watching this live or a recording of this, you should get a ton of value from this. So I'm going to go ahead and see. Let me see. I should be able to share my screen here. Are we good on that? Can you see my screen, Mike?
I Let me stop sharing my screen first. How about that?
Okay, there we go.
I can see your screen now. We're all good.
Awesome. All right, so we're talking about tax savvy real estate today. One of the big topics, I think it's sort of trendy. I've personally seen a lot of good little things out there on social media, short snippets of this stuff. But there's a lot of things that people get wrong, I think. And there's kind of a misconception of how powerful this actually is. And so hopefully today, I don't want to get too much into the weeds because it's not your job really to know exactly what forms and everything that you can get into the weeds with when it comes to taxes. But I want to give everybody here a light bulb moment. Okay. So for me, that light bulb moment came a couple years ago. And so today I'm going to start with a story. I learn best by kind of connecting things through story. And my goal here is to share kind of the big picture of what's going on within the tax industry and real estate and how that kind of all ties together for you being a real estate agent. So let's start with the story real quick. I want everybody to imagine themselves for just a second. All of us on this call live in the same town. Okay. We're all in the same town, and the special unique thing about this town is we've got one grocery store that we can shop at. Okay. So Michael, you and I are shopping at the same grocery store. We can't go and drive to the town next to us. Go ahead and you can type in the chat too. Like if you grew up in a town like this that was small. I grew up in a small town like this, not one single store, but pretty close to it. So I'd bump into people at the store all the time. But so all of us are required to go to this one single grocery store, right? In this example. And the next key piece of this is the grocery store is only open one day out of the year. Okay. So that's like the big, like imagine having to cram everybody in a single grocery store to do all your shopping for the entire year. And you've basically got like one shot. Like there's no shots to kind of go back. So you load up the family, you show up to the grocery store. The parking lot is packed. You thought you were going to get there a little early. So did everybody else. The grocery store is packed. Okay. Carts are everywhere because people are just getting in and out as fast as they can. And you get out with your family. Everyone grabs a shopping cart. Everyone's got their own, right? We're all going to get in and we're going to fill these things with groceries for the year. Now you get in, you walk in these doors, they open for you. And you immediately realize, okay, there's no walking room in this store, right? It is jam packed. So what happens is you get into line with everybody else and you snake through the store. So you're going to go through the outside. You're going to start at the produce. You're going to go to the vegetables. Then you're going to snake back all the way to the back of the store, and you'll come down, row 1, and then you'll go up row 2, and you're snaking through this. It's like no room to kind of wiggle at all. And you're loading up your groceries for the year as you snake through the entire store. Now you get through the entire store. You spent like an hour and a half snaking through here. It's been a terrible experience. You're tired. Everyone's kind of angry, hangry a little bit too. And you get to the final row and you're towards the back of the store and you're looking at the cash registers and you notice something that's kind of irritating. It's like walking into a Walmart where you've got 50 checkout stands and there's like two people working. And you're like, you guys are only open on one day of the year. You couldn't just staff it to make this thing go quicker. So you're kind of annoyed. You're waiting in line. Your phone dies. Like at this point, you're just people watching. There's nothing to do, right? So fast forward, you get up to the cash register, and you are almost. It's almost your turn. The person in front of you is now beginning to scan their groceries, and so you're kind of people watching at this point. Like you're watching the person in front of you. You're making sure that you have everything in your carts, that you didn't miss anything, and you're watching. And the cashier is just scanning like a madman. Beep 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 beep, like head down, just scanning items as fast as you can, right? And you see the person in front of you reach down next to, the little card reader area, and they pick up what looks like a coupon book, right? And you're kind of curious because you're like, I didn't even know they had coupons. Like, I probably would have checked that out if I knew. I didn't get like a mailer or anything. And so you're looking through, and the guy in front of you thumbs right to the middle of this coupon book and tears out a coupon right from the middle, hands it, puts it in front of the cashier. The cashier's scanning like a madman, kind of forces him to look up and realize someone's standing there with a coupon in front of him. And he's kind of surprised too. So he takes a coupon, reads it. He asks the man a couple questions. You can't really hear what they're saying, but you're watching the whole thing take place. The man then reaches to his back pocket, takes out a couple of documents, a couple of pieces of paper, shows it, talks to the guy, and the guy starts entering in the coupon code. Now, at this point, he's done scanning the groceries, and you're kind of curious at this, but like you're like, I mean, if this guy saves a couple $100, a couple $1,000, I don't know what's this going to look like. And so you are way up in his business, right? You know how you're standing in line at the store and you try to like give people space. You're not like up in their bubble. At this point, that's out the window. You are like kind of looking over at the screen to see his bill and see how much it comes down because you're kind of curious if there's a coupon in there for you. And so his bill looks to be about $20,000. Okay. So he's getting ready to pay $20,000. This cashier inputs the coupon code, hits enter, and you see that bill go from $20,000 all the way down to $1,000. And immediately you're feeling a little anxious because you're like, hold on. I didn't know we could save that much. I didn't know that there was coupons within that book that could save me this much. What is going on? And so the guy in front of you is like happy as a clam. He's like whistling and kind of like skipping out the store, right? He's got all of his groceries. He takes them out. And now it's your turn. So the cashier starts scanning your groceries and you feel a little pressure. You feel a little rushed right now. And so first thing you do is you pick up that coupon book and you're like, all right, he was somewhere in the middle of this book. Let me thumb through there and see what it says. Is there any other coupons? And you're trying to read the coupons and you feel rushed and you're like, I don't understand. There's a bunch of like fine print at the bottom. You're not sure if you can use this. You're seeing some other things where it doesn't look as powerful. So you're like wondering and you just don't understand really what you're looking at. And so you're looking at it for a second, but the guy's scanning your groceries really fast. And so the next thing you do is you say, hey, could you help me? Like, you're talking to the cashier at this point. Do you know what that guy used? Do you know what the coupon he used? Do you think I could use that same thing? What documents did he provide? And the cashier, scanning like a madman, looks up at you. He looks back at the end of the line because there's like 300 people behind you, right? And he tells you, look, if you don't know what coupon you need to use and what you want to do right here, I can't really help you. My job is to get you in and out as fast as possible. If you know what you can use, go ahead and provide me with the documentation. That's totally fine. And I can input the code for you. And then you're kind of annoyed at this point. You're like, come on, man, like just help me out. He used one coupon. And so from that point, you're like, all right, I'm annoyed. The cashier says, you know what? He's kind of reading the situation. He goes, I do have a coupon for you. Pretty much everybody can use it. So we can apply that. And you're like, all right, something's better than nothing, right? I'm going to, save a couple $100, maybe a couple thousand. You're kind of feeling optimistic. And so he finishes scanning your groceries. He grabs the coupon from the front of the book. He inputs the code and you're watching your bill. It's about the same, $20,000. and your bill goes from $20,000 to 19,900. And you're like, son of a gun. I only saved $100 for that coupon. Now, you're walking out of here defeated. You're like angry. You feel like you should blame the cashier. You're kind of blaming the store manager because there's not enough cashiers to even manage everybody. You're just angry at the whole situation. You're mad at yourself because you didn't have a plan in place. You didn't come prepared. You didn't even know the coupon book existed in the first place, right? Who here's felt like this during tax season? When you're getting prepared to file your taxes, when you sit down with your tax guy and you're like, here's all the documents that I have. And he's sitting looking at you like, hey man, we have like a week to file. Uh, there's really nothing that we can do. Here's what I can give you a little bit of a savings based on what you got going on, but he's not really there creating a plan for you. He's not giving you the right plan in place to go ahead and make some major savings on the tax game. Okay. And many people live like this. So I want to dive into this story real quick and kind of connect the dots for us now. So we're going to talk about 4 characters. Character number 1 is the store owner. Who do you think the store owner represents in this story? Any guesses? The store owner represents Uncle Sam. Okay. So they set the rules. There's only one store you can go to. You can't go file your taxes. Like you're paying your taxes to one person. You're not paying them to another country, whatever's going on there, right? So they set the rules of the game. They write the coupon book, right? They're going to determine what you can and can't use, what items are discounted, what's not, what's the fine print at the bottom of each of those coupons, right? They set the rules of the game and they control the store. The second character is the cashier. The cashier is your tax professional. Okay. It's your CPA, your EA, whoever you're using to file your taxes. Now, the tax industry as a whole is severely outmanned. It literally is walking into a Walmart and you see 50 cash registers and you've got 3 people working, right? The tax professional industry is aging out. And there's really not a whole lot of options for people who want to actually put a plan in place. Their job, in a lot of the ways tax professionals run their business, is volume based. So their goal is, hey, I'm going after 300 returns this year. Okay. And their job is to try and get you in and out, right? I'm filing your taxes. I'm a tax filer. All I'm really doing is maybe giving you a couple of coupons that I know most people can use. And I'm saving you a little bit of money on the tax side. But there's really not much that I'm doing other than just filing for you. The third character here is the guy in front of you, right? That's the other customer. They're a tax savvy planner, right? So they had a plan in place. They probably talked to somebody prior to going to that store, right? They looked up what coupons they could use. They brought the correct documentation. They knew what questions to ask. And when it came time to go ahead and purchase those groceries for the entire year, they came prepared and they were able to do it seamlessly, not a whole lot of fuss. And they saved $19,000. They paid almost nothing for that year's worth of groceries. It blew your mind, right? And then the last person in this story is you, who most likely is overpaying. Okay. Now, let's talk. The big thing that I want to get through in this presentation is knowing the rules of the game creates an unfair advantage, right? And so understanding, let's go ahead and blow this picture up a little bit. Why does the tax code exist in the first place? One of the major reasons the tax code exists is to help steer our dollars within the economy. Okay. So certain tax benefits are given to certain industries that Uncle Sam wants to go ahead and incentivize. They want dollars to flow into these industries. And so you being a business owner and you being in real estate, these are 2 of the biggest incentivized industries that exist within the tax code. Okay. Being a business owner, think about how this benefits. You have to kind of put on your Uncle Sam hat here. Think about why Uncle Sam would want to try and incentivize these industries. You being a business owner is incentivized because every time you grow and every time you sell a good or service, that's taxable, right? So the more you do, the more taxes can get collected. The more you grow your business, maybe you bring on some more employees. The more taxes are paid through employees, right? The other big benefit, just besides like collecting taxes, would be our capitalistic economy runs off of business, right? So like we have to be small businesses. That's why you hear like small business owners are the backbone of our economy, right? And so Uncle Sam incentivizes people to do that. We're providing value in the marketplace. The other industry, being real estate, is incentivized in the same way, right? Real estate, US real estate is unlike anything else in the world. It's massively incentivized, and it is another backbone of our entire economy, right? So we have real estate investors, people who go and build new homes, right? We've got all these builders out here in the valley as we are expanding. Who builds that? Private investors, right? Private companies. The government ain't building our communities. And so they're incentivizing investors to do so. The same thing is they incentivize investors to go and flip and remodel homes, right? So a lot of our homes that have been around for 100 years have outlasted what they were originally built for. And that's a great thing because then we can continue to build our infrastructure within the US. Homes aren't just like going vacant and then they like settle and destroy, they get destroyed because nobody's sitting there. No, we go in there and we flip them, we make them better, they're revitalized, boom. Now more people can live in there for another 30 years, right? So it's a good thing. So Uncle Sam incentivizes those two industries. And you on this call, if you're an agent, are sitting in both of these industries. And if you don't know the rules of the game, you're I guarantee you that you're overpaying on your tax bill. So real quick, I'll introduce myself. My name is Tim Johnson. I'm with RE Pro Tax. I own a tax firm there. We specialize with working with real estate professionals, agents, investors, and then small business owners who want to invest in real estate. So we help put these plans together. I'm a tax savvy real estate advisor. So I come from being an agent, just like you. I became a licensed real estate agent in 2019. And in 2023, I started working and kind of going down that rabbit hole of the tax benefits side of real estate. So up to that point, I had flipped homes, worked with investors, helped regular people. My main mission was helping my clients build wealth with real estate. So whether that really was a primary house, I would always sit down and forecast, what does this house look like for us in the future? How can we use this to build wealth in the future? Now, maybe it gets turned into a rental property, right? So my whole goal from the get-go was to help people build wealth. And as I got further into that game, I started going down the tax rabbit hole. And if you're near or have been at that point, it is a long rabbit hole, right? You can get into a lot of different avenues within the tax benefits of real estate. But for me, the light bulb moment came through hearing a story similar to the one that I just told. It was saying, okay, the tax code is more like a coupon book. If I look at it like that, I don't need to know everything in the book, but I do need to know what benefits me, what coupons I can use, and which ones are the most powerful, right? I think we look a lot on social media today, and I'm sure that many of you guys have seen a lot of the different tax strategies that you can do. I'm going to pay my kids, and I'm going to do X, Y, Z. I'm going to write off my vehicle. I'm going to do the home office deduction. I'm going to do the Augusto rule. All of these cool sounding, trendy things. A lot of times when I sit down with a client, we're asking ourselves this: is the juice worth the squeeze? Right? Because I could probably do a handful of those trendy tax strategies that you just listed off. But in reality, even if I maximize paying my kids and I document everything correctly and I make sure that everything is done right on that end, I saved at most about $5,000 a kid that I would have paid to Uncle Sam, which isn't nothing, right? And if you stack that with multiple kids, great. But not everybody is really in that you got to wait for your kids to be of age to be able to actually pay them for real work. We're not like cheating the system here. So you can use a handful of items like that, but it becomes really burdensome when we can talk about something like we're going to talk about today, where there's one lever, it's one coupon, and it's the most powerful coupon that exists in the IRS code. And it's the most powerful coupon that you as a real estate agent can use. Right. So in started working and going down the rabbit hole of the tax side in 2023. And then the start of this year, 2025, my brother and I opened up a tax firm because we had worked with clients and we were working with our real estate clients saying, hey, let's build out some of this strategy. Let's put a plan in place to be tax efficient for when you're buying real estate properties. And we were having to educate their CPAs on the tax benefits, right? Like I said, the tax industry is pretty outmanned, outgunned, and the tax code is really big. It's 6,000 pages long. And then there's like another 80,000 pages describing those 6,000 pages. And so you can't know everything. And what we came across is a lot of CPAs just don't understand the real estate specific coupons, right? Most people aren't taking advantage of them. If you're a W-2 worker, most of their clients were just kind of regular people. So today I'm going to be talking, we're finally going to get to the topic. Today I'm going to be talking about real estate professional status. Now, if you're in here watching this, type in the chat, say, yes, I've heard of real estate professional status. Say no if you've never heard of this, right? I'm sure, like I had heard it a couple years into being an agent. Somebody had mentioned it, but I didn't really know what it meant. And I kind of just put it on the back burner for a long time. Real estate professional status is your golden ticket within the IRS code, right? Willy Wonka style. It is your golden ticket. It is the most powerful tax coupon that you can use. And we're going to get into why and how you can use it today for yourselves. So what is a real estate professional? Okay, I ask this question every time I give a presentation like this. Now, remember, we don't make the rules of the game. So we can't just come up with a definition. We have to go by off of what the IRS says. Okay, so they're in charge of coming up with the rules, setting who can use these coupons, setting what coupons there are. And so this is how the IRS defines a real estate professional. You got to hit three things. Number one is we have to spend more than 750 hours in the year that we're doing this. So in 2025, I've got to spend more than 750 hours in a real property trader business. Okay. That's pretty easy. So to give you guys a reference point, that's like 15 hours a week. So if you worked for 50 weeks, you had 2 weeks of vacation throughout the year and you averaged more than 15 hours a week in your real property trader business, you hit this, right? So that's pretty easy. Sometimes we spend more than 15 hours in a day if we've got a difficult file or a difficult client, right? So, hey, boom, done for the week. You just kick it up the rest of the time. The second thing we've got to make sure that we do to be considered a real estate professional is we've got to spend more than 50% of our time in that real property trader business. Okay. So what this means is as a real estate agent, I can't have a side gig where I'm working more doing that, right? I've got to spend at least the 750 hours. And then I've got to make sure that the majority of my time, more than 50% of all my personal service hours that I'm spent working is in my real property trader business. And then lastly, and we don't see this all the time, when I see this described from other professionals, this one's pretty commonly missed. We've got to own at least 5% of that business that we're talking about. Okay. So the big thing that comes into play here is to give you a real example, when we're working with like an agent who's a property manager and they work for a property management company, but they don't own any piece of that company, none of those hours that you're spending working in that business count. Now, the majority of agents here watching this video are going to be self-employed, like contractors. So you own 100% of your business. It's not a problem. You should qualify on the third one. But in order to be qualified as a real estate professional, to get the benefits of what we're going to dive into here in a second, you've got to hit all three of these requirements. Okay. So this brings me to the next piece because I was going down this rabbit hole myself and I was like, okay, well, what is a real property trader business? Like it kind of sounds like self-explanatory, but it's not as much. And this is where you start to get into a little bit of that. It's not gray area within the IRS, but there's some kind of ambiguity here. So here's how the IRS describes a real property trader business. You can be any one of these or a combination. So I could have multiple businesses and I can combine those hours to hit my 750 in total. So here's what we got. You can be developing or redeveloping real property. Okay, so any of our developers, our builders, they're all qualifying, right? Construct or reconstruct real property. So flippers doing major remodels, anything like that, that's going to count as well. Or construction companies doing all the construction within real property. Acquiring real property. Okay, so that's a full-time investor just simply acquiring property. If this is his full-time business, easy to hit, right? Convert real property. This would be like converting a multifamily building into like an office building, right? So you're converting the use of the overall building there. Rents or leases real property, right? So that could be a property manager, or if you just own property and you're renting it out. Operates or manages it. This would be more of the property manager. So if you own that business, you own a property management business and you're managing it full time, this is your business. Your business is qualifying you as a real property trader business. So you become a real estate professional. And then lastly, broker real property. Okay. So all the agents watching this video, we fall under number 7, brokering real property. Now there was actually a court case that went all the way to the to court that was saying, hey, the IRS was suing a taxpayer because he was an agent and he was claiming real estate professional status. And they said, well, you're not a broker. That doesn't count, right? And it actually got dismissed. The IRS was wrong on that, which I love it when the IRS is wrong, right? And the court determined that us as agents, we're always operating on behalf of our brokers. And so we're doing all of the paperwork. We're doing everything on behalf of the broker, right? And so we do qualify as real estate professionals. So take a screenshot of this if you need to. Take a picture of this because we won't get into it in this presentation, but start thinking of other people that you know who might qualify as a real property trader business, right? This applies to a lot of our clients too. So a lot of our business owner clients in the real estate industry can qualify. So let's go ahead and take this as an example real quick. So I work 500 hours as a real estate agent, and then I spend another 400 hours as an investor and flipper. Do I qualify as a real estate professional? Yes, that's 900 total hours. Although they are in 2 different businesses, both of those businesses are real property trades and businesses, so I can use those together. I qualify, right? Now let's look at the other example. We've got a nurse, a full-time nurse, W-2, who spends 1,600 hours in her job there as a nurse, and then spends another 250 hours as a real estate agent in the year. She does not qualify as a real estate professional. Okay. She does not spend the majority of her time in that real property trader business. And she didn't hit the 750 hours either. Now, here's the catch. Now, for everybody who's an agent and you're not married, put this on your dating profile. All right. You say, hey, I'm a real estate professional, baby. Right. This is a huge perk because when you're married filing joint, you are treated as one taxpayer. And so if you qualify as a real estate professional, your spouse also gets the benefit. And this is where it gets crazy powerful because if you've got a spouse who's a high income W-2 earner or even owns their own business, but they're not considered a real property trader business. So maybe you've got, let's say you're married to a doctor or a lawyer or a dentist or something like that, and you're the real estate agent and you qualify as real estate professional status. That's where the benefits are going to come into play here. And we're going to get into why this is so powerful. Okay. So what is all the fuss? Why am I even talking about real estate professional status? I had to give you a little bit of a breakdown for who qualifies and how you actually take advantage of this. But what's the actual benefit? Well, the IRS lays out your income into 2 separate categories. You've got active income and you've got passive income. Okay. Now, active income is considered money that you're bringing in from your business. It's like the money that you get from the sweat of your brow, right? So whether you're W-2 or whether you're a business owner, this is 1099 W-2 income, doesn't matter. That's going to be on the active side. So for this example, we're going to use an average couple who is not a real estate professional just to show you the stark contrast of them buying real estate versus you buying real estate and owning it. Okay. So on the passive side, we've got rental real estate. The IRS always defines rental real estate as passive. It doesn't matter if you felt like that was a full-time job, right? Managing your rental, but it is always considered passive in the eyes of the IRS, right? So we've got this couple. We've got an engineer and a nurse. One's bringing in W-2 income. The nurse is bringing in W-2 income. The engineer kind of owns his own business. He does kind of consulting freelance work. He's bringing in 175, 1099 income. So combined, they make about 300,000. They own a couple rental properties. Okay. So you might have a client that maybe fits this type of profile, right? They own a couple properties and they're cash flowing pretty decently, right? They're bringing in a couple thousand a month, actually. That's great in terms of cash flow. So they're bringing in $25,000 on each of these properties for the year. And because of all the deductions in real estate, this is where real estate is better than any other asset that you can really get. We can actually offset most of that income coming in, if not all of it, with excess. So because we can, depreciate the asset, because we can write off marketing expenses, because we can write off property taxes, like all of these things that you can actually deduct against the income coming in. Both of these properties, even though they actually collect cash flow, at the end of the year, come tax time, they actually show a $10,000 loss, what we call a paper loss, because it's not a real loss, right? You actually made money on both these properties, but they result in what's called a paper loss. So each of these results in 10,000 loss. What happens to those losses? Well, those losses can then go on to offset any other form of passive income. So let's say that this couple here owns a passive stake. They bought into a friend's business and they just collect checks from that. They don't actually do anything. Maybe they invested in that business. That would be over there on the passive side. So any income that they bring in from a passive business, they can use passive losses to help offset that income. That means that it wouldn't pay any tax on that. Okay. So for the average person who owns and operates real estate, this is how they have to live their life. The IRS draws this red line right down the middle and says, none of the losses that we create from real estate can ever offset anything on the active side. But they can fill up this bucket on the passive side and we can use them for whatever we want as long as that income is passive. So maybe in the future years, they pick up another property and they need to use those losses in the future. But there's a huge problem. Where's this couple paying the most tax? It's not on the little bit of cash flow that they're bringing in from the rental properties. It's from the businesses and the active income that they're bringing in, right? The nurse there is sitting, hey, I'm making 125 a year, and the engineer's saying I'm making 175. We're going to have a pretty big tax bill at the end of the year. Okay. Now let's show you the stark difference in you as a real estate agent or investor or combination of the two, whatever you are, right? What this looks like when you own property, right? You sit in both these camps. You're a business owner and you own real estate. You get the golden ticket within the tax code for this. So I'm going to show you what this looks like. You've got the same two properties, right? They're bringing in $25,000 a year. Now, when you sit down with us, we're most likely going to look at what are the properties that you have? When did you buy them? How much did you buy them for? Right? How much is the land worth versus the actual structure of that? And we're going to make a decision to run what's called a cost segregation study. Now, what a cost segregation study is it allows you to itemize the components within your house. So think about, taking a standard deduction versus an itemized deduction. Sometimes it's better to just take the standard deduction, but sometimes it's advantageous to take the itemized deduction. That's the decision making that when we sit down with a client, we're usually kind of walking them through. Now, without getting again into the weeds, because this is like another 30-minute explanation, a cost segregation study, running one of these studies on each of these homes, is actually going to result in not a $10,000 paper loss, but a $135,000 paper loss that we can take on each of these properties. So now we have we've got $270,000 of losses. Now, for most people, you don't have that much passive income to be able to offset. That would last you for years and years and years, possibly, to get through and actually use those losses to help offset the income that you're actually bringing in on the passive side. Now, here's the key thing. Real estate professional status is what gives you the key to crossing this line. Nobody else in the IRS code can cross this line, right? Uncle Sam is saying, hey, you're in real estate full-time, you're a business owner. We're going to treat these rental properties not as passive, but we're going to actually treat them as a part of your business because you're in the industry, right? You're doing what it takes. And you're going to spend a certain amount of hours managing these properties. And there's some things that we have to make sure we have documents of, right? Remember our story when he pulled out the documentation and had everything correct? There's some little hoops that we got to jump through to make sure you're doing everything correct, right? But if we do it correctly, we can use the losses now, 135 from each of these properties. It's $270,000 of loss. And now I can cross this line. In my $300,000 of income that I would have to pay tax on, I'm going to reduce that by 270. Now my new taxable income is $30,000 for the year. And what type of tax savings did that result in? For this specific couple with where their income is, married, filing joint, that's a $46,000 that would have gone to Uncle Sam. That is no longer going to Uncle Sam. It's coming right back to you. And then what do we do with tax savings? We're going to go buy a third house. So here's the secret sauce to one, reducing your taxable income, but two, using the snowball effect of tax savings to accelerate your wealth building, right? Don't blow this 46K in tax savings on a boat. Don't do that. So we're going to take the tax savings. We're going to go buy a third property. And what are we going to do with that third property? We're going to probably do the same thing next year. I'm going to run a cost seg on that property. I'm going to take all those losses. I'm going to make sure I have all the correct documentation. And then I'm going to go ahead and lower my taxable income again. And you can see how this becomes a massive advantage to you in owning rental properties as an agent. So much so that I sit down with prospective clients who want to kind of use the strategies that we teach here, who are not real estate professionals, and they come to us and ask, "Hey, my spouse, we're going to make her a real estate professional because they know this is so powerful." We've got them making a big income coming in from their business or from their W-2, and their whole plan is based around their spouse going and getting their license, right? Spending the hours needed, making sure they qualify as a real estate professional just so they can use a strategy like this. Because this one lever is more powerful than 10 little tiny tax strategies that you could use, but you're probably going to end up pulling your hair out because it's kind of a fuss to kind of use all of those at the same time, right? This fits into not only your tax strategy, but your wealth building strategy as well. So as an agent, it fits into how you want to operate your life anyway, right? Most of us know all the benefits of real estate. We've got appreciation, we've got leverage, we've got debt pay down from tenants, we've got cash flow that we're collecting. But the big piece that we always miss as agents is the tax benefits. Now, Uncle Sam will gladly let you play this game. And if you don't know the rules, you can play the game and he'll still take your tax dollars. He's got no problem doing that, right? You can benefit the economy. You can provide value to people around you. You can revitalize real estate for Uncle Sam all day long. And if he gets your tax dollars, that's just a win-win for them, right? So understanding the rules of the game is a big piece, and putting a plan in place is essential. Now, for everybody here, you can take a screenshot of this. This is just quick napkin math. So this is the only slide I'm going to talk about using this within your business as an agent. But this is a big piece because if you can sit down and you can understand how this game is played, you're understanding how real estate can impact your clients' lives more, right? You're going to provide more value by understanding some of these things. Now, here's a quick napkin math on how you can get to, figuring out maybe how much depreciation somebody can take in a single year, or how much losses they might be able to take in a single year. So we've got a house that's purchased for $450. Okay. Here in Phoenix, unless it's like a big lot, super unique property, if it's just kind of a cookie cutter home, most times the county is giving the land about 20% value. So we can't depreciate land. So we can only depreciate the structure value. So if I bought it for $450, I'm going to take 80% of that. Now, maybe your client is looking at doing a renovation to this before they go ahead and rent it out. So maybe they're looking at doing 50K in renovations. And let's say they purchased this property in 2021, or they purchased it this year. Because one great thing about that one big beautiful bill that was passed is they brought back 100% bonus depreciation. And it's brought back permanently and indefinitely until somebody changes the tax bill. But it's brought back for like the next 4 years. We're going to have 100% bonus depreciation. So this is a big deal for all of your clients. If you can understand and wrap your head around how to use this information to bring value to them, this is massive. So let's actually change this date. Let's go ahead and say that this was bought this year, and they're going to get the benefit of 100% bonus depreciation. This just makes your cost seg more powerful. So this just makes the losses that we can take a lot more powerful when we run that. Now, take 20% of your overall basis. So what is your basis? It's the structure value plus that renovation cost. Remember, we're removing the land value from this equation. So if we did all this math correctly, we've got about $82,000 of losses on a $450,000 house, right? Who can think of picking up a property for $450,000 and turning it into a rental, right? The thing is, in a market like ours right now, not only where we are in our economy, but where we are in Phoenix, our market has changed substantially over the last 10 years. We are no longer a potential cash flowing market. We're much closer to a California market than we are to a Midwest market. So if you're looking at investment properties and you're thinking, okay, I need to find something that cash flows $500 a month, that's going to be very, very difficult to find in our market. But for most people, they're going to just go ahead and write this off and say, nope, I can't find a property that can cash flow. For you, if you can take advantage of the tax benefits, you might find a property that breaks even. But if you know how to play this game correctly and you know the rules of the game, you can take this and you can have this result in a $20,000, $30,000 tax savings, depending on your tax bracket and what you're doing here. So this is a big way for you to go ahead and say, hey, I'm going to make deals work. And that because of the tax savings, I can afford to help this property kind of progress and stabilize over the next 3-year period. Appreciation is going to go up. Cash flow is going to go up eventually with tenants paying a little bit more in rent, right? So this is a really effective way to get some of your clients who want to own and invest in real estate, but are slightly on the fence as well into the game, showing them the benefits of how to do this. So here's kind of where we end for today. What should you do with this information, right? And I want to give you kind of 3 action steps because one of the things that is so hard about jumping on a call like this and hearing information about tax strategy is like, okay, well, that was cool, really powerful stuff. Now, how do I apply it, right? Number 1, continue to educate yourself. I hope that today was more of just like a light bulb moment and it gave you some good ideas of how this could be implemented within your own life, your own business, but also maybe you've got a client in mind that might qualify, right? And I need you to switch from the mindset of being just a filer to being a planner, because the better you do in business, the more impact an actual plan will have in place in creating good tax savings for you. You got to know the rules of the game. Number 2 is I suggest not becoming the expert. It took me nearly 2 full years. I've worked with tax attorneys. I've had to pay for court cases. Get this, like you can't just look up court cases to see how the IRS has ruled on certain things. You have to pay for those. I've spoken to so many CPAs to try and find more information. How does this actually work? Hopefully I've made it sound simple in the presentation today, but this information is very hard to find and sift through, right? So work with a tax pro who actually understands real estate is the second thing that I would recommend, because the tax code is just so big. Not everybody specializes with it. The third thing is try and understand this. Take this one level further and try and understand how you can begin applying this within your business, right? I've completely branded myself over the last 2 years as a tax savvy real estate advisor. I help clients on the real estate side. I still have my real estate business, right? And now that we have the tax firm, we're able to offer that value to our clients. But my mind went from, okay, how can I benefit from all this information to there's a lot of people who need help. There's a lot of people that this information could benefit. And if you can begin to just even plant a seed with a client into what this could do for them and owning more real estate and building a portfolio of real estate, you're going to begin to see how no longer are you on the hamster wheel of like always finding the next client. Like just with this information, the first time I kind of introduced this to one of my clients, we turned a client from buying a primary house to now we've done 7 separate transactions with that client in the last 3 years. So that little seed of here's what's possible, this already fits into your plan anyway. You want to own and invest in real estate anyway. Why not make this as optimal and as efficient as possible? And oh yeah, check out this amazing tax benefit that we can be doing at the same time. For a lot of people, that changes their entire outlook and it gets them off the fence and into the game, gets them in the arena. We can do a Q&A, Michael. Here's my information. Feel free to reach out. I've got our website here and then my email address as well. But if we've got any questions or
Yeah,
anything that came through,
I was gonna ask you. I know you just kind of shared a little testimonial, but I was gonna say if you can share one uh client that you had that was a real estate agent, and
yeah,
then share one that is not in real estate, maybe an investor, business owner, whatever, just to give them a little bit of insight. That'd be wonderful.
perfect. Yeah. So we have one that was a real estate agent. She came to us last year. And right before the year, she turned her primary house. She had bought a new primary that like very month, and she turned her old primary into a rental property. She had a super low interest rate. So for a lot of people, this is like kind of what's happening naturally for some people is like,
Right.
I'm going to go buy a new property and I'm just going to turn my other one into a rental because I don't want to sell it because I've got 2.5% interest rate. So she turned that one into a rental. And what we did is we ran a cost seg on it. And I think our end result was that we saved right around 18,000, between 15 and 20 for her in actual tax savings that would have gone to Uncle Sam. So she was a full-time real estate agent. She's not like a full-time investor. She just happened to turn her old primary into a rental. And so this was just one example of like bare minimum, right? You don't have to be buying up gobs of real estate everywhere and investing in apartment buildings and car washes and all a bunch of crazy stuff. Just a single family home was able to result in about somewhere between $15,000 and $20,000 tax savings for her last year when she filed. And so we actually got all of that done like a few months before she was had to file. And that was kind of her biggest lever for the entire year of saving money. And that was money that was coming in from her husband, who's a W-2 employee, but then also her commissions, right? So all of that active income that was sitting on the active side, we were able to reduce that by a certain amount of losses that we took with a cost segregation on her property. The other option was some of our initial clients actually are not real estate agents, but they are in real property trade. They own a real property trader business. We have a client who is a plumber out of state in Ohio. He owns not a plumber, an electrician. He owns an electrical business. So he's working in construction, reconstruction. They're doing major projects. It's not just simple little things within his business. So he qualifies as a real estate professional. Now, his whole game plan is he's got, oh, I want to get this correct, seven kids out in Ohio. And he's like, I want to start buying properties and allowing my kids as they get old enough to like live in these properties for cheap, right? To kind of get their feet underneath them, like get their life going, give them a head start as they get married, whatever, them and their spouse can live in these houses for cheap. And so he's like, this is part of my overall investment plan. I want to own a portfolio of real estate, but I also want to kind of provide this for my family as my kids get older.
Right.
And we did the same thing for him. So he bought actually a commercial building for his electrical business. And we did the same thing. We ran a cost segregation study on that electrical building. So again, it's not a residential home, which we kind of went over in the presentation. This was a commercial building for his business. And now he was able to take those losses that we created with the cost segregation study against his active income coming in from the business. And I forget off the top of my head how much of a savings it was. But I think it was probably right around the same, right around 15K. The properties out there are a little cheaper here than here in Phoenix. So his
Okay.
commercial building was a good tax savings for him. And then we actually went on to go buy another his first rental property, which was a single family home. They made it into kind of a triplex, and he's cash flowing great on that property, and he's going to run a cost seg on that as well.
Heck yeah. Love it, man. Thank you for sharing. Um, any more questions? I know we are definitely running out of time, but I wanted to just, if you could keep an eye on that for me, Tim, on the question side, I'm going to go ahead and
Yeah.
just wrap up on my side real quick. Um, Tim, brother, thank you so much for jumping on today and just sharing your insights. And I'm going to pass Tim everyone's information to Tim so that way he has it just in case if you guys are interested in some more information. But just real quick, some upcoming events that we have here at Landmark. We're always trying to provide as much value as we can and also do as many classes. But what's coming up this week? Actually, tomorrow we have the 23rd annual We Serve Expo. You could find Landmark there almost every year, but it's just an opportunity for you agents, lenders to just go visit different vending booths. It's a great opportunity to network, and we are honoring our heroes for 9/11 in honor of what took place, about 24 years ago. It's crazy. I mean, that it's crazy how fast how time flies. It feels like it was just yesterday. But I'll be there. I'll be there all day. And if you stop by our booth, you'll get a chance to win a little something something. So stop by booth 86 tomorrow. It'll be at the Renaissance Hotel up in Westgate. And then coming up on the 18th, we have Keith and some of our landmark team putting together a social media AI for real estate. The focus will be ChatGPT and Canva integration and implementation for your business. And I think this is great because I use it all the time. And so if you can make that, please attend. There will be lunch provided. And it just, it's a great refresher too for those of you that already use it. I know Chat and Canva are updating quite frequently, so it's always great to stay in the loop of that. And then if you are interested, make sure you reach out to your business development manager for those details. And then coming up here, we have a power panel with some of the real estate's industry experts here on how to build a sustainable business that lasts for the long run. And this one will fill out quickly. This is an invite only, but if you are interested, I highly encourage you to reach out to one of us so that way we can share some details with you. This will be at the Henry in Arcadia, and you got Oleg at the Brokery, Phil Sexton. He's been in the industry for a long time. Family Ties too, one of the biggest real estate teams in Arizona. Michelle Mojica, excuse me, owner of Mojica and Associates, does very, very well and runs multiple businesses. And Kimberly Ryan, regional growth leader and strategist for Real Broker. Obviously, Real Broker's been here for a while, and I'm sure you've heard that name before, but it'll be a great panel. You definitely don't want to miss out on that. And then just a little shout out to our team. Um, our business development managers work extremely hard and just uh, making things go around here at Landmark. And we are just always here to support you through your business, whether it comes to marketing or just getting you connected with the right escrow team. Without them, without Beth, Keith, Mary, Megan, me, Patty, Renee, and Raylyn, it wouldn't be what Landmark is today. So appreciate you guys. And then just a quick reminder of what our mission here is at Landmark is to really deliver with intention, integrity, and excellence throughout every step of the escrow process. We hear it loud and clear with many agents that we get to work with, whether you bring us the deal or not. It's not just about the transaction, but really providing that precision and clear communication and service throughout the process. So give us an opportunity, send us your next escrow. We are your dedicated closing escrow team, and we would just love that opportunity. Thank you guys so much for tuning in today to Make Your Mark. I hope you have a wonderful Wednesday and rest of your week, and we'll see you next week. Talk to you later. All right, Tim, appreciate you, brother.
There we go. Thank you for having me on, man.
Yeah,
Appreciate it.
no, it was good. I'll send you the recording too, so that way you have it. And then, oh, actually, it's still recording. Uh-oh. There
There we go.
we go.